Hey guys, Jason at Hard Money Bankers. We're talking about the importance of having proper insurance policies in place when you are doing loans. We are so crazy about making sure insurance is always in place, and obviously you need to have a proper system to make sure that's tracked. But as hard money lenders, there's only a few places you can actually lose on, and insurance is one of them. So that's why it's so important to have in place. So title and title fraud obviously is one place. You making a bad investment decision and writing a bad loan. Let's just assume all your loans are good collateral pieces. And then insurance, making sure you have the right insurance in place, because if you have the wrong insurance in place on these properties, let me tell you, they're not going to pay it out. So I want to go through all the different insurance types so you fully understand them. And if we ever have a chance to meet in person, I'm happy to tell you tons and tons of insurance horror stories, because we've had a ton of them. They've already worked out well in the long run, but some scary stuff. So this is what happens. And then I'll tell you a few safeguards to make sure there's always insurance in place as well. So typically there's three types of insurance policies. The one you typically want in all of these deals is builder's risk with liability. So it's a hazard insurance policy that covers obviously hazard, burn down, stuff like that, but it's also builder's risk. So during the construction process, if you're doing a rehab loan, it covers building materials and things like that. So the standard is builder's risk and then liability. The liability is obviously someone slips and falls on the property. You're covered on that. We like to do at least the some people do the replacement value, some people do the amount of the loan. Obviously, you want to do at least the amount of your loan, or you do whatever's higher, obviously, but you want to do at least the value of your loan to make sure you can get paid off when you have it. So at least the value of your loan on that. So that's typically the most standards, builder's risk with liability. There's a lot of insurance companies out there that do that. Some of the big name brands may not. So you may need to find a smaller brokerage that handles all that, but that's the most popular one. And if someone comes to you and says, "Hey, I don't want to, it's too expensive. It's $1,500 for a 6-month non-refundable premium," because that's usually what they cost. For a standard side medium housing price, medium house, it is what it is. Like, that's what you have to do. I don't like to get the contractor to have their own liability insurance that covers them. We like to have our own liability coverage that covers the property. So that's the first kind. The second kind is a vacant policy. So if the property is completely vacant, for some reason, let's say you do a bridge loan on a property and there's no construction being done, or whatever the case is, no one's living there, it's vacant. That's usually the most expensive policy. So vacant coverage. And then there's a tenant policy. And the tenant policy is if it's a rental property or there's tenants moving in. And one thing that a lot of investors will try to sneak on you that you need to make sure of is they'll put a tenant policy in place with liability because it's significantly cheaper than a builder's risk policy, and they want to try to save costs. But let me tell you, if you put a tenant policy in place, and there's fire, and you're doing construction or whatever, and there's no one clearly living in there, number one, these insurance companies do inspections. But if there's loss on that and they find out that it should have been that the wrong policy was in place, they will not pay out that premium. So it's absolutely worthless. There's no point to save a few $100s, and you're not even saving it. The borrower's saving the few $100. It doesn't behoove them or you, because they're not going to get paid out and you're not going to get your money back on the deal. So you've got to make sure you always have the proper insurance policies in place on each one of these things. Now, one thing that does occur pretty regularly, let's say you do a fix and flip loan for somebody who's going to turn it into a rental property. There's policies out there where you can do a builder's risk with liability that converts into a tenant property, a tenant-owned insurance policy after that. So those are all things to keep in mind. They have to be done the right way. Obviously, you can't have owner-occupied policies in there. People try to squeeze that in as well. So go reach out to some of those local insurance companies and make sure, you have that right person. I think companies like State Farm and Allstate are doing these now. They weren't when we started, but I think they're doing these now. But like companies like All Risk, a lot of these guys, they're more high risk policies. That's just what they are. So they're a little bit more expensive. And another thing related to this is we always make sure insurance policies are paid upfront for the whole term of the loan. I don't want to chase people around month after month to make sure there are policies in place. So what happens is, in order for us to fund a loan, we don't collect it on the HUD either. You know why we don't collect it on the HUD? Because then all of a sudden we think if we collect it on the HUD that the premium is being paid, but that necessarily doesn't mean it got paid. So what happens is they give you a deck page, right? They give you a declaration page showing, yep, here's your bill for $1,500. We'll do a 6-month policy. Cool. Well, then you do closing and that $1,500 is on the HUD. No problem. And then all of a sudden the title processor, forgets to mail the check or gets lost in the mail or whatever. You're not getting notified on it. And all of a sudden 7 days later, you may get notified from the title insurer or the insurance company that says, hey, we never got the check. Well, then you got to figure out where it is, where it's coming from. You have to go back to the bar or try to get the money. You have to pay for it out of pocket. So we always make them pay upfront before we close. That's part of our instructions. We show our deck pages to the title company before they can disperse, and we actually don't wire out of our office until we have the deck page and the proof of payment. That's part of it, the system that we have in place. So you should implement that system as well. You've got to make sure the insurance is paid, and you got to make sure you have the right insurance policy in place. That's so important. We use the mortgage office as a servicing software, and before that we used iServicing, and before that we used some desktop mom and pop thing. But if you're just starting out and you're new, you can use an Excel spreadsheet. That being said, you need to track it regularly. And when those, I don't have one in front of me, but when the insurance envelopes come in, because we get dozens of these every day of insurance envelopes of, hey, this is renewing, this is bound, this is canceling, this is whatever. You got to have a good system in place to make sure you're on track of that stuff. Insurance is so important. And as you grow, I promise you that insurance claims happen a lot. They regularly happen. So you got to make sure you're properly protected. So the one other thing related to insurance is you have to figure out a system of what happens if insurance gets canceled or it needs to be renewed and the borrower doesn't do it. Now, this typically happens on deals that might go into default where the borrower is out of money or something happens. So we have a forced place insurance policy that we can put in place. And pretty much what it is, it's an insurance line. I don't want to go too much in detail on this. If we ever get to meet, I'm happy to kind of go a little bit more detail on this. So unless you're doing tons and tons of deals, you might not necessarily need this right now. If you have deals that you can't get them to renew, what I would just do is just pay the premium on their behalf. That's kind of one way to do it, and then just tack it onto the payoff. Not the best way to do it, obviously, because it's you paying it, but you need to protect your interest. So you need to make sure there's always insurance. But what we have is a forced place insurance policy, and we just go online and we say, cool, this one didn't pay. Let's put this on this date and, keep it running. And it's a per diem thing. So you only pay as an outstanding. And if we find out at a later date that they did have insurance in place, we can backdate it up to like 30 days. So we don't have to pay for that. So all things to think about related to that. And keep in mind, if we're paying a cost for somebody, this is a different topic, but if we're paying a cost for somebody, like if we have to step in and pay someone's taxes, if we have to step in and pay someone's insurance, we're charging a premium for it. Like we're charging them interest on that money for that, for out of pocket. So cool. That's my spiel on insurance. Insurance is not sexy at all. And I fully understand that. But as I discussed earlier, there's only a few ways you can really lose in this space. And that's one that you got to be careful. So you got to be a stickler for insurance and make sure you always have that in place and the proper insurance in place, or it's not going to cover it anyways. Hopefully you found this helpful. Until next time.